Bob Wiedemer joins us, Danielle DiMartino booth. Danielle, not so much of the Justin Bieber thing, although I'm appalled. On this
Clearly,
market
Neil,
thing.
you shorted Justin during the break. Clearly, you shorted that
Oh
stock.
my God, don't get me going. But on this, we forget in the middle of volatility. Oh my God, it's the end of the world, the end of the world. And I'm not minimizing down days. I'm not minimizing or overemphasizing up days. But the trend of markets over time is good. What say you?
I would say that the Fed's got the markets back and that the market knows it. So as of last Friday, we found out all over again that bad is good, and the markets have taken off ever since then.
That's interesting. In other words, that whatever you're worried about today, if you're worried about the Federal Reserve, crashing this party by hiking rates next month or at all in the near future, relax, right?
Look, maybe Brexit wasn't enough to spook the Fed.
Brexit refers to Britain dropping out of the EU, but go ahead.
Yep. Maybe that wasn't enough to put the Fed on hold in the middle of June. But I would say unemployment expectations hitting a 26-month high and a disappointment on ADP and a disappointment on the non-farm payroll number, that should do the trick, and I think investors know it. So Bob, when you counsel people on markets, and of course I'm sure you're, as is Danielle, the type who says, it depends on your time frame. If you need money right away, a year from now, maybe not aggressively be in stocks. If you've got a young person coming before you with a 10-year horizon, let's say Justin Bieber, what do you tell them?
Well, I tell Justin to definitely take pictures because I agree his shelf life is not going to be that long, but not like yours, Neil. We'll look back on you in 10 years.
You are so welcome back to this show. Go ahead.
Yeah, right. But yeah, in terms of looking at the markets, yeah, we're partying now, sort of. But the reality is the markets haven't moved all that much. We're up on the S&P maybe a couple percent this year. We were down a couple percent last year. I mean, since they've stopped printing money, October of 2014. We haven't seen that much of a party. Yeah, if you're an Amazon, great. If you're an Apple, not so great.
Yeah.
But overall, it's not there. Now, I do think the Fed's got our back, but I don't think it's going to come in until this market goes down again, and a lot.
Danielle, when you step back from these gyrations like we're seeing, and I always like to sort of not to wax too philosophical on it, how do you tell people, young people who have skewed the market's average retail participation in this whole run-up in the last 9 or so years has been rather pronounced, or not pronounced, I should say. It's been an incredible run-up, but individuals have not been big participants. They feel, I guess, once very badly burned, very so not into it. What do you tell them?
Well,
I'm not sure what to tell them, truly. Sorry, Bob. I'm not sure what to tell young investors because they haven't known a world where interest rates have been positive. So they're really living in a neverland. And to Bob's point earlier, we've been range bound since the minute the Fed stopped expanding its balance sheet. Even though the Fed continues to buy 40% of treasuries and 25% of mortgage-backed securities just to hold its balance sheet at that steady state. If you look at that combined with Bob's observation, you completely understand why markets have
no doubt, or why people of all ages are leery. Bob, what do you think?
Yeah, I think that's exactly right. People of all ages are leery right now. I mean, overall participation in the market has declined on a retail level significantly since 2008. I mean, even elderly people they're just not ready for it. They'd almost rather do muni bonds than do this market. And so what I would tell them is, yeah, I mean, I think if the Fed is there to support this market, it's still, we're going to see upward trends. But once the Fed doesn't support, be careful. And, of course, if we ever lose faith that the Fed can support the market, that's a much bigger issue. If people say, well, the Fed's got my back, but I don't think the Fed can keep it up, then we've got a really big problem. But I think that's a little ways down the road. But right now, I think as long as the Fed's going to remain supportive, it's probably an okay market to be in. Don't worry. But they're worried, and I can understand that. 2008 scared the heck out of a lot of people, and I understand that. Plus housing, too.
All right. Good points all. Guys, I want to thank you both very, very much.